Hello and welcome to Markets via Deven Choksey, the daily market podcast where we decode the Indian financial markets. Let's get started for the day. The GIFT Nifty this morning is trading lower, indicating a muted start for the Indian markets. The Asian markets are largely lower in early trades, where Nikkei is down around 0.2%. The US futures did trade lower after cash market ended in the red on Monday. Also, the US market ended lower in the last trading session, where S&P 500 was down around 0.4% and Nasdaq did fall around 0.2% each. If we go stock specific, Zoom did surge around 11% following a better than expected Q4 earnings report. The US 10-year yield rises slightly to 4.27% ahead of key economic data due this week. And about the bullion market and the energy pack, the crude did rise on tight supply due to possible shipping disruption. Brent at present is trading above $82 a barrel, and gold prices are steady as dollar index remains below 104 mark. So this is how the trade setup for this morning for global markets look like. Let us take a look at the trade setup for today. While taking the cues from what happened in the last trading session, the market is expected to continue its consolidation along with some minor profit booking, started especially after hitting a record last Friday. As we clearly see, 22,000 is likely to be an immediate support for the Nifty 50, followed by 21,900 as key support, with likely hurdle on the higher side at 22,200 to 22,300. However, given the continuation of higher highs and higher bottoms on the daily charts on the broader levels, the overall trend is expected to remain positive in the short term. In the last trading session, the Sensex did fall around 353 points to close at 72,790, while the Nifty 50 was down around 100 points to close at 22,122 and formed a small bearish candlestick pattern on the daily charts, which indicates follow-through weakness post new high formation. The market is still placed in a broader range movement, and one may expect buying to emerge from the lower levels. Positive chart pattern like higher tops and bottoms are intact, and present weakness could be in line with a new higher bottom formation. Hence, the Nifty is expected to find strong support around 21,900 to 21,850 levels, while on the upper side, the area of 22,200 to 22,300 is likely to be a strong hurdle for the markets ahead. The broader markets were also under pressure, with the Nifty Mid-Cap 100 and Small Cap 100 indices falling around 0.33%. Considering all of these, let's now take a look at the key support and resistance levels you need to consider for both Nifty and Bank Nifty. Nifty is likely to take immediate support at 22,085, followed by 22,055 and 22,006 levels, while on the higher side it may see immediate resistance at 22,182, followed by 22,212 and 22,260 levels. Talking about Bank Nifty, in the last trading session, the Bank Nifty continued its correction for 4 days in a row, falling 235 points to 46,577. Bank Nifty has been range bound between 46,400 to 47,400. The range bound action is likely to continue in the absence of a decisive move in the key heavyweights of the index. For Bank Nifty, it is expected to take support at 46,516, followed by 46,427 and 46,282 levels, while on the higher side, the index may see resistance at 46,806, followed by 46,896 and 47,041 levels. So these are all the important support and resistance levels for Nifty and Bank Nifty. Let us now take a look at the stocks and news for the trading session today. We start with 197 Communication, as the associate entity Paytm Payments Bank has reconstituted its board of directors with the appointment of ex-Central Bank of India Chairman Srinivasan Sridhar, retired IAS officer Devendranath Sarangi, former executive director of Bank of Baroda Ashok Kumar Garg, and retired IAS Rajneesh Shekhri Sibal. They have recently joined as independent directors on the board. The company has withdrawn its nominee from the Payment Bank's bank board, and Vijay Shekhar Sharma stepped down as part-time non-executive chairman of board and board member. Next stock in action is CMS Info System, as promoter Cyan Investment Holdings Pte Limited is likely to sell up to 26.7% stake in the company via a block deal for 1,500 crore, as we see in the reports. This means that the promoter seems to be exiting the company. The floor price of the deal has been fixed at 360 rupees per share, a 9% discount on Monday's closing price. Lemon Tree Hotels is another stock which we need to consider, as the hotel chain has signed a license agreement for Lemon Tree Resort in Sankwa Skar Rajasthan and K's Light by Lemon Tree Hotels in Vijayawada, Andhra Pradesh. Both properties are expected to open in FY26. The next stock in focus is Hind Rectifiers, as the electrical and electronic equipment manufacturer has received an order worth more than 200 crore from Indian Railways. Powermech Projects is another stock in focus, as the company has received an order worth Rs 396 crore from Southeast Central Railway for the construction of an electrical 4th railway BG line in Chhattisgarh on an EPC basis. And last but not the least, keep an eye on Kilich Drug. The pharmaceutical company said its subsidiary Kilich Astrobiotic PLC has secured a significant tender issued by the Ethiopian Pharmaceutical Supply Service of the Federal Democratic Republic of Ethiopia. The contract for the supply of pharmaceuticals is worth $9 million. So these are all the important stocks and news. Taking a look at the FIs and DIs data, the foreign institutional investors net sold shares worth Rs 285 crore, while the domestic institutional investors offloaded Rs 5 crore worth of stocks on 26th of February. So this is how the trade setup for this session looks like. From here, we come to the wrap of the podcast session for today. However, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.